What's going on? Alex here, and today we're going to answer the question, is Biden's student loan forgiveness taxable? And we're going to do so as follows. We're going to start with a brief history of Biden's student loan forgiveness because, as you may remember, this latest round of forgiveness is not the first step in the process. It's a bit of deja vu that's happening right now, and we're going to go over that. Next, we're going to look at the income tax implications at both the federal and the state levels so you can be confident in handling this if the situation pertains to you. We're going to talk briefly about reporting on the tax returns and how that should look in terms of making sure you don't ignore reporting requirements that can potentially affect you later on. And we're going to discuss state conformity to these federal rules. Now, what are we talking about? You may know that the Biden administration forgave $39 billion in student loan debt for more than 800,000 borrowers. And this just happened in July of 2023. Now, you may remember that there was another round of student loan forgiveness that happened a bit earlier, and that was killed off by the Supreme Court. And we have an article here that details this. Supreme Court kills Biden's student loan plan in a setback for millions of borrowers, and that was in June of 2023. And we could see here that it says, in a highly anticipated decision, the Supreme Court on Friday struck down President Biden's groundbreaking plan to forgive some or all federal student loan debt for tens of millions of Americans. And essentially, it gives a brief history of how this all came to be here. Let me make sure you all could see this. All right. And it refers to the fact that this first round of student loan forgiveness, if we can call it that, came about in August of 2022. It says, late August, President Biden, this was of 2022, told federal loan borrowers that the U.S. government would cancel up to $20,000 of debt for low-income students who received a Pell Grant to attend college and up to $10,000 for the vast majority of remaining borrowers. And soon after Biden's announcement, 6 states filed lawsuits to stop the implementation of the debt cancellation plan, arguing that Biden exceeded his authority under the federal law. And at that point, the Supreme Court stepped in to review the case, and they struck it down. All right. So that is the path to round 2 of student loan forgiveness. So basically, we could see here that they changed it so that the repayment plans, which included updated counts of borrowers' payments and so forth, technically led to forgiveness. So they're doing it in a bit of a roundabout way, but they're achieving a similar goal, in which case the debt is being forgiven. So they had round 1 of student loan forgiveness that happened in August of 2022. That was struck down. Now we have what we call round 2 of student loan forgiveness, and the Supreme Court hasn't struck it down yet, but who knows what's going to happen in the future. But that's where we are now. So we have round 1, we have round 2. How does that affect the income tax side of things? Well, we're going to look at that right now. Traditionally, the federal income tax code is such that it taxes cancellation of debt. And to frame that a bit better, let's say you have $100,000 of credit card debt, and you call up your credit card provider and you say, listen, I can't pay this, let's settle for $50,000. The credit card provider may agree to that, but then they're going to send you what's known as a 1099-C, we'll look at that later, for the canceled amount of $50,000, which now becomes income to you, which is taxable. So a credit card problem turned into a tax problem in many cases, because if your marginal tax rate is 37%, you multiply that by 50,000, that's how much taxes you're going to owe at the federal level only. So from the tax law perspective, we see here Code Section 61 tells us that gross income includes the following items. It has a nice list here. And then on number 11, we see that income from discharge of indebtedness is taxable. All right. Now, we do have Code Section 108 that has some exceptions when discharge of debt is not taxable. But as you can see, those exceptions are fairly narrow. They don't apply to a wide range of taxpayers. So in many cases where there is cancellation of debt, it would, by default, be taxable. But the Biden administration was looking ahead, and they were thinking about all of this when they came out with the modified treatment of student loan forgiveness for discharges in 2021 through 2025. And if we read here, it says, the American Rescue Plan of 2021 modified the treatment of student loan forgiveness for discharges in 2021 through 2025. Generally, if you're responsible for making loan payments and the payment is canceled or repaid by someone else, you must include the amount that was canceled or paid on your behalf in gross income for tax purposes. That's the traditional treatment. That's why it says generally. However, in certain circumstances, you may be able to exclude this amount from gross income if the loan was one of the following. And we can see here a loan for post-secondary education expenses. Post-secondary generally means college. A private education loan, a loan from an educational organization described in Section 170B, and a loan from a tax-exempt organization under Section 501. And if we take a look at publication 525, you can just Google this and you'll see that this is publication 525 for tax year 2022. If you Google that, you'll get this document. It's a PDF file. And it says here, canceled debts. In most cases, if a debt you owe is canceled or forgiven other than a gift or bequest means an inheritance basically, you must include the canceled amount in your income. We talked about that. But now we have a few exceptions listed down here, and one of which mentions the American Rescue Plan of 2021, and that it modified the treatment of student loan forgiveness for discharges between 2021 and 2025. Now, it does mention what the IRS website told us a little while back. So a loan for post-secondary education expenses could be excluded from income taxation if it's discharged. And here we have a definition for loan for post-secondary educational expenses, and it goes as follows. This is any loan provided expressly for post-secondary education, regardless of whether provided through the education organization or directly to the borrower, if such loan was made, insured, or guaranteed by one of the following. And the first item we have there is the United States or instrumentality or agency thereof. And in many cases, student loans are backed by the government. So I would imagine that the vast majority of individuals to whom this applies would fall in that categorization. But as you can see, there are a few other options here, so that if that's not your specific situation, you may still qualify to exclude your student loan forgiveness from income tax. Now, traditionally, when there is a discharge of indebtedness, you have to deal with Form 1099-C, all right? And in our example that we talked about with the $50,000 in credit card debt being discharged, that would be reflected as follows. Essentially, you have the date of the identifiable event or the discharge, you have the amount of debt discharged, so in this case it would be $50,000, and there would be a bit more information here, but at the end of the day, the default treatment is that we put that right on the tax return and have it be taxed, unless there are few specific exceptions that are met. But this Form 1099-C is important because at this point, we don't know if it's going to be issued for all of these 800,000 individuals for whom the student loan debt was forgiven or not. Okay, so we have to be aware that it may be possible that you may receive Form 1099-C in the mail, and you have to figure out how to report that on the tax return. So that's kind of a bit of insight on the income tax situation at the federal level, all right? And again, you can get more information in publication 525, and then the IRS website here also mentions the modifications to the general or traditional treatment of student loan debt discharges, all right? So that brings up the question, what happens at the state level? All right, so we talked about federal. So federal, it looks like it's going to be excluded from income. So if you had $200,000 of student loan debt that was discharged, then you essentially have no federal income tax impact. But we all know there are a number of states that are out there, and most of them have an income tax. So the question is the student loan forgiveness going to be taxable for state income tax purposes? All right, and this is where a lot of people can get tripped up. And we see here, this is an article from NPR. This was from back in September 9th, 2022. So a bit later than round one of Biden's student loan forgiveness was in place. And it says borrowers in 7 states may be taxed on their student loan cancellation. All right. And provides a bit of detail there. It says, while Biden's sweeping student loan debt relief plan won't be subject to federal income tax, in 7 states, borrowers may have to pay state income tax on all of those canceled loans. Before 2021, student debt cancellation was generally considered a form of income and therefore taxable at both the federal and usually state levels. There are 41 states with an income tax, so in that case, it would apply in those states. But in March of 2021, the American Rescue Plan changed that, at least temporarily. Until the end of 2025, Congress said the U.S. government will not consider canceled student loan debts to be taxable income. Now that the Biden administration has unveiled its sweeping new debt cancellation plan, the federal exemption is a really big deal. That's because most places follow the federal government's lead when it comes to income tax. The majority of the states that have an income tax say essentially whatever the federal government says is gross income, we say the same. But states differ in that some states say whatever the federal rules are, we conform to that unless we say that we don't. All right. So there's no requirement that states have to treat things the same way as the federal government. But in many cases, just to keep things simple and to prevent themselves from having to worry about all of these crazy tax laws, they just say, look, whatever Uncle Sam does, we'll follow. Other states don't have that automatic conformity, right? So they, over time, say, okay, well, our state conforms to the federal Internal Revenue Code as of, let's say, January 1st, 2020. But of course, there are changes to the federal tax code thereafter. And then maybe 2 years later, that same state will go, hey, now we conform to the Internal Revenue Code as of January 1st, 2022. So you can see they periodically update their conformity. That can result in different state income tax implications. Now, it says that states where borrowers may be taxed for loan cancellation, and we'll look at a list here. So North Carolina, then we have Indiana, Mississippi, Arkansas, Minnesota, Wisconsin, and California. All right. But we have to think about how this looks politically, right? So let's say the federal government says, look, we're not taxing the student loan discharge. And in your state, let's say you don't conform to that. The taxpayers within your state are essentially being punished for being residents of your state, right? So politically, it's not a great look to have the student debt discharge be taxed in your state while the federal government isn't taxing it. So what I'm expecting is that over time, a number of these states are going to get in line and conform to the federal rules, because as I said, politically, it's not a great look if they don't. And we can already see here that California took the initiative, and we see here Californians won't have to pay state taxes on canceled student loans. And this was part of a budget bill signed by Governor Newsom. Is an income tax exemption for student loans, and this is dated as of May 17, 2023. And we can see here, part of the state budget signed by Governor Newsom is legislation exempting Californians from paying income taxes on forgiven federal student loans and some pandemic-era emergency grants. Several groups are covered by the exemption: community college students who have unpaid fees forgiven by their schools, anyone who received federal higher education emergency grants, and those who took out federal loans and qualified for forgiveness under the Biden administration's student debt relief plan. All right. So one way for politicians to get in good favor with their constituents is to go ahead and conform to the federal provisions that say, hey, you know, these student loans that are being discharged, we're not going to include them in income tax. So ultimately, my expectation is, if I had to guess, that all the states are going to conform, and student loan discharge, talking about this round 2 that we've had, is not going to be taxable. All right. That's if I have to put my crystal ball to work. All right. Now, going back to our itinerary here, we talked about the brief history. We talked about the income tax implications. Now, back to the reporting side. I mentioned Form 1099-C, and it may be issued, it may not be issued. At this point, we don't know, because round 2 of the Biden student loan forgiveness just came out. It's a brand new thing, and there is going to be guidance that's going to be issued that's going to tell us how to deal with the reporting for forgiveness of student loans. The key thing to keep in mind is you should not ignore Form 1099-C if you receive it, all right? So if you get 1099-C in the mail, definitely take a look at it and look at the most recent guidance that has come out telling you how to take it into account, because you may have to report it on the return in a certain way. There may be a new form that is released by the IRS. You may have to include it on the return and then negate it. So for example, we might say 100,000 is included in income, and then immediately put a negative 100,000 to take it out of income. Okay, so for the IRS matching to work, because the computer matches different amounts and different tax filings, for that matching to not issue a notice, we may have to include the income and then zero it out immediately on the return, just to make it very clear and very easy for the IRS to understand what we're doing. All right, so if you don't receive Form 1099-C, there may not be a reporting requirement that goes along with this. You may just be able to ignore it. But if I had to predict, would think that 1099-Cs will be issued, but there's going to be a certain reporting requirement at the federal and state levels that you have to meet to make sure you don't have notices from the IRS and the states and creating a whole mess for yourself in that regard. Okay, so I have that little note here saying that the IRS and other taxing authorities, namely the states, are likely to issue guidance regarding specific recording requirements pertaining to student loan forgiveness. Do not simply ignore Forms 1099-C, all right? Because if you think about it, you might say, hey, it's not taxable. I'm not going to include it on my return. That may be incorrect, okay? So watch out for that. And finally, just to reiterate the point, states I would expect would conform, but it's not definite. So it may be that one or two states say, hey, you know, we're going to tax this stuff just because of politics and who runs that particular state government. But that's one thing to watch out for. So when it comes time to file taxes, assuming that this second round of student loan forgiveness is not thrown out by the Supreme Court or anything along those lines, if filing your 2023 returns, then you would want to look at what guidance the IRS has issued in terms of reporting, if this affects you, just so you can avoid matching issues with the IRS computers. Also, the state level, you may have to look at each one of those states that you file returns for to see what the reporting requirements are. So one state may say, hey, you know, just leave it off the return. Another state might say, hey, you need to fill out this special form that we've created just so we know you received the forgiveness and that we're not taxing it. So I'm sure there's going to be additional guidance that comes out on that front, but just know that this is a fluid situation and you shouldn't just ignore it because it may not be taxable at the federal and or state levels. So with that said, hopefully this has provided some insight into all of this student loan forgiveness craziness and the tax implications and all that good stuff. So if this video was helpful for you, hit that like button right now. Do it right now. It's free. It's not going to bite you. Subscribe to the channel. We'd love to have you. Leave a comment down below. Let me know your thoughts. Let me know your questions. And if you ask an interesting question, I might just answer it in a video just like this one. And just so you know, I am with Efros Financial. It's a firm that provides a full suite of services, especially for businesses. So tax, accounting, bookkeeping, any sort of financial planning, we've got you covered. So if you have any of those needs, look in the description down below for all of the contact information. We'd love to talk to you and go from there. And as always, hopefully this was helpful. Thanks for watching.